This is better now. We're having a value meal. All right. Love to see it. Okay, we're muted. We got the chat. Beautiful. Now, if you guys can just give me one quick second. Also, if you wouldn't mind, if you guys have an Instagram, if you guys could shout us out and just say, hey, we're live, yada, 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 it would really help folks see this. And as you guys know, like I love doing these streams, but we're really trying to pick up some traction. So I'm out here. I'm trying to give out as much sauce as possible on these streams. And you guys are going to see, I'm going to break down the entire Russia and Ukraine crisis. And I'm going to break down the interest rate decision from the Federal Reserve next week, which is the single biggest economic event of the past 5 years. And we've had a bunch, from the pandemic crash to some of the scares, to the 2018 crash, to the Euro crisis in 2015 and 2012, to the great, the global financial crisis in 08. We've had a lot of different financial issues or economic kind of like meltdowns. I think the interest rate hike next week is going to be the single biggest economic event of the past 5 years. So I'm going to break that down. But if you guys wouldn't mind sharing this on social media, just so folks know that we are live, let's get the brand out. Let's get the name out. Let's get folks some value. If you guys don't like this stream at all, at least get some folks on with you to talk shit, and you guys can all just be haters together in the group. Whatever it takes, let's pump this thing out. Bianca, are you on this call? It's like a complete side note. I know you remember this markup from yesterday. This was the signal that got called. Fact to be more true, the stop loss got hit depending on the broker you have. My break evens got hit. I moved all my stop losses to break even. But it was at 820. So when I sent out the signal yesterday, the original entry was at 725. The stop loss was at 790, but that wasn't enough room. It was too small in the daily, right? So there was 4 main reasons to take the signal. The first one was, and hold on, just got hit. I moved all my stop loss. Whoa. Let me copy this. Get over here. So there was 4 main reasons to take the trade yesterday. The first is that we're already on a bearish trend. So you guys know that the way I trade, and I want you guys to pay attention if you're new to this, because I'm going to explain the way that I trade so you guys have context before we go in. First things first, if this is your first time on the stream, my name is Roy Dunya, co-founder, CEO of ChartAddicts. We're a consulting agency for retail traders worldwide. If you guys want any help in your performance with your trading, you can always head over to chartaddictsfx.com to work one-on-one with a coach. You get unlimited personal coaching every month. So my name is Roy Dunya. I'm the co-founder, CEO. My trading strategy is I use a naked price action, top-down focused, strategy. I trade off of structure, and I mostly look at direction above anything else. So the main reasons to take this trade yesterday, the first is that we were directionally bearish. So we're looking for shorts, right? I'm waiting for a bullish pullback, and I'm looking to short. So in a bearish market, we sell, right? In a bullish market, we buy. Some folks are like, Roy, that's really simple, elementary stuff. Yet some of you guys love counter trend trading. Some of you guys got sold a dream on counter trend trading. And, you just can't seem to let it go. Trading against the trend has its own unique risks. You guys have to understand this. Trading with the trend is one of the highest probability ways to take advantage of the market. So bearish trend, key level of support and resistance. You guys look left, massive wick action here for support. Massive action here for support, support, resistance, resistance. And I was expecting this candlestick to wick down due to the historic, what's happened previously at that zone. Beautiful. Everybody, please tag us, Instagram, if you have a quick second. The third reason, 78.6 retracement. So I measured the Fibonacci from the most recent swing high, which was this candle. I kind of measured it on the 4-hour. So it was a little bit early. And the price was still forming lower highs. And so if this is the most recent swing high, and I'll show you guys on the 4-hour why this was the swing high. We're still creating lower highs, which means that we're still respecting the bearish trend. So if we're bearish, we looking to sell. We're at a key level of support and resistance. That's usually where we get a reaction. We're at the 78.6 retest, a very common retest area or pullback area for a continuation of the existing trend. And we're still forming a lower high, confirming that the trend is being respected. Make sense? So that was the reason we took the trade. So the signal was at 729, or sorry, 725. And the new adjusted stop loss was at 820. Now, I did close partial loss yesterday as the market started to retrace against me. Basically, what happened was I entered right here off of an aggressive entry of this candlestick. The market started to create support and started to push up. So what I did was, in order to limit my loss, I closed the partial of my position. I left the other piece open. The market pushed up and then came back in our direction, and I was in profit. At that point, that's when I moved my stop loss to break even. The market ended up hitting my break even and continuing bearish yesterday. So I'm not currently in this trade anymore. Is anybody from the ChartAddicts team still in this trade? Is anyone still in this position? Arjun, Chris, Tommy, Carl said he got out. Zavi got out. Bianca, it was a little bit late in the session. Bianca, me and you were thinking the same. For me, it was a little bit late. I really could have just held it, but I don't like to hold in between sessions. So honestly, closing was the smartest move for me personally. Now, if you guys are just hopping on YouTube, welcome back, or welcome if this is your first time. My name is Roy Dunya, co-founder, CEO, ChartAddicts. I want to ask you guys two very important questions. It's not complicated. One, let me know one thing that you guys have learned on this stream since we started. The reason I'm asking this is I hope you guys understand it is a commitment for me to get on one of the busiest days of the week on Thursdays and to do this stream. So what I want to see is if you guys are actually taking something away or if we have to kind of change some things around. So let me know one thing that you guys have taken away from the stream. I know I'm asking for a lot here, but I'm going to do the trading for you. So don't even worry about these markets. Instead, tell me one thing that you guys have learned and let me monitor these markets here. So I am bearish on I'm bearish on GJ. There's two things that you can do, which is take an aggressive entry here at the 152.7 area. Put your stop loss above 153, so 153.3 at least. Or what you can do is wait for a break and retest of 152, and you can short at the 152 level on the way back under the zone. So for GJ, I am still bearish. The opportunity right now is at a very, very awkward place. On the daily, it looks good because there are some wick areas up here. But you guys can see whenever it doesn't wick back down, chances are it's going to push up bullish. So what I really want to see for shorts right now is a break back under the 152 area, a retest of 152.6, and then drop. So it's Fibonacci trading. So if you guys are trading GJ, look at the top of that most recent impulsive push, measure it from top to bottom, and then look at your Fibonacci levels. We have a perfect rejection off the 50. So you can either put a sell limit at the 50 for a double top, or you can wait for a bearish break below these two Fibonacci levels, retrace, and you can short at either one of these Fib levels like a stair stepper on the way back. Hope that stair stepper example makes sense. That's GJ. I am still bearish on GJ for the time being, but long-term, big picture, I am bullish on GJ. So if we're talking about anything above the 4-hour, I'm very bullish on GJ. Why is that? The monetary policy of both central banks are complete opposites of each other. So the Japanese central bank is having monetary policy that's very regressive, that's going to take them a long time to get out of economically, and it's just going to burn their currency. They're printing a whole bunch of their currency and devaluing it at the same time, and also the interest rates are negative, meaning the government doesn't even make money from lending. They will pay you to take money and stimulate the economy. So Japan's monetary policy is extremely bearish for them. The Great Britain is doing the exact opposite. They purposely left the European Union so they don't have to abide by any of the same policies, and that they could take advantage of, their sovereignty. Sovereignty meaning they make their own rules. Whenever you do that, your currency tends to strengthen. So as the Great British Pound strengthens and the yen sinks to the bottom of the ocean like a rock, the GJ is going to go to the moon. Now, right now, it's a bit of a transition period because Europe is going through this massive debacle. People are moving funds out of Europe and into more favorable places around the world. However, once the momentum goes back into that pair, GJ is going to continue bullish for at least the next 2 to 3 years. Okay? Just a side note. So I'm just looking through some of these comments. It is important to me to figure out what you guys are learning and what you're not taking away. So what do you think about gold? It's going to continue down to 1305. That's my profit target. I hate trading after 1 p.m. I learned not to gamble on my entry and be patient. Good stuff. I legit thought I was late. What I learned is to incorporate fundamentals to technical trading, which has allowed me to trade more with more confidence. Don't force trades to preserve capital and wait for more confirmations. I only take high probability trades. Respect. Beautiful. Now, if I'll be honest, I learned a lot from doing this stream myself because I used to force a lot of trades and I always felt like I was late. What I started to realize is on these streams, I only take the best of the best trades. Now, when I started to think to myself, this was like last year when we were first doing these streams, I'm like, well, why don't I only take the trades that I would take on the stream? Like what kind of, like it's the obvious things in your life that's going to make the most impact. So I said, what if I only took the highest quality trades that I do on the stream, which is exactly what I do now. A little bit lower, Stefano. 61 is a little bit lower. Yep. Right here. Push back up for a retest and then drop. So why am I bearish on Nasdaq? The long anticipated interest rate decision from the Fed is next week. So for some of you guys that don't know anything about fundamentals, the way I can explain it is there's been a party going on for 15 years where all the banks and institutions around the world have been borrowing from the Federal Reserve of America for zero interest. Now, you guys know that if you have a car, mortgage, insurance, anything that you have, there's an interest rate attached. Whenever you borrow money, you're going to have to pay back the money plus a fee. People have been, or institutions have been borrowing for free for the past 10 to 15 years, and they're charging us 12% on student loans, 3 to 5% on housing, 7% on car loans, or 4 to 7% on car loans. Credit cards 12 to 20%, business loans 12 to 10%. Like, they have been ripping us off. But that's where a lot of the banks have been generating most of their funds. Now that the party is over, they're about to raise the interest rate, which means the price of money is going to go up for these institutions. They're going to lay that price back on us. That's what they do. They don't take the hit. Companies never take the hit, except for ChartAddicts. But a lot of companies don't take the hit. They just pass the cost on to the consumer. So what we're going to see is a lot of lending is going to slow down, which means that small businesses are not going to have any lending. They're going to go out of business. Big businesses don't have enough lending for research, development, and hiring. So they're not going to hire as many people. The productivity of the economy is going to reduce, and we're going to have serious problems throughout the economy because not enough labor is going to be in there. There's not enough people to do work. So if you guys can understand how this domino effect is going to go, the economy is going to dry up in terms of money. So less people get hired, less research and development is done, which means less money is going out, less taxes get paid, more people need unemployment, which is a cost on the government, and so on and so forth. So we're already in a recession. This is what nobody else is going to tell you. Okay, you heard it here first on the ChartAddicts live stream. We are currently in a recession, believe it or not. It just hasn't been realized because there's still a lot of fluff in the markets. But after next week's Federal Reserve decision, everyone is going to become aware of the fact that we're deep in a recession. And I don't think the market participants are taking this interest rate decision as seriously as they should. So here's the two scenarios. This is some fundamentals for you guys because I don't know how much you guys really look at that stuff. The Federal Reserve was set to raise interest rates 4 to 7 times this year. They're not going to raise it 7 times. If they raise once, it's going to crash the markets. They're not going to do it 7 times and ruin the economy for life. So one was expected. Now, the problem with this is we're in the middle of a geopolitical situation that's extremely threatening to our economy, the whole Russia and Ukraine crisis. So if Jerome Powell says we can't raise rates because this economic situation is too bad, then we're going to have a serious problem. The markets are going to, well, it's not really a problem. The markets are going to recover like crazy, but the economy is going to take a hit. So if they raise rates, stock market's down. If they don't raise rates because of the war, stock market go up. Got it? Let me know, like, read that back to me if somebody understands that. If they raise rates and ruin the economy, stock market will crash. If he says we can't raise rates, the interest rate, we can't raise the cost of money, we need to keep the cost of money cheap so the economy can keep moving because of the war, then the stock market's going to go up. The stock market's going to celebrate the fact that the Fed doesn't have the balls to really crash the stock market. So I'm going to, fingers crossed. I hope that makes sense. I'm not, I'm going to keep my fingers crossed here. Let me go through these pairs real quick. If you guys trade any of these, I would write down the level because I'm going to do this pretty quickly. I'm staring at my pair. That's what I'm going to be focused on. Took a short on SPX from the 61. So basically, I took the same thing I did on NAS top. I actually I projected the fib a little bit lower because it's my final target. We can talk about projecting on one of the advanced calls later, but essentially it was this move. This is where I expect the 4100 to be the target. 61 was right here. Beautiful rejection. Now we can see a push up to 4260 or maybe a little bit higher to 4270. And then we can short back down from here. Why am I looking at shorts? Look at the momentum on the daily. Highs, lows, lower high, lower low, lower highs. So double top here for a drop would be ideal, or a 78 retest, which would kind of put us at around 4270 or 4275. That would be a nice shorting opportunity. Ready? TP1, 42,300, TP2, 4,100, and TP3 is 4,000 flat. It's a bearish trend. We've already pulled back. Wait for a double top. If this thing pulls back higher, then short at the 78 right here. Anywhere between 43.30 and 43.50. There's a 30-point range here, 300 pips that you can short. Aggressive entries are at the bottom of the range. Passive entries are at the top of the range. Make sense? I'm going to do the cliche. Put a 1 in the chat if that makes sense. Put a 1 in the chat. All right. Let's go through GJ. GJ, higher time frame. We are in this range. So you guys know the way I trade. I trade supply and demand, or as I like to call it, discounts and premiums, because the institutions, they like to buy at discounts and they like to sell at premium prices. And of course, we have the handy dandy neutrality zone right in the middle. Now, I think I have my neutrality zone drawn a little bit wonky. I'm going to have to draw. Wow. I copy and pasted it and it landed exactly where I wanted it to go. Shout out to the magnet tool. Boom, boom, boom. So we have support and resistance. That to me is like the middle of the range. So I'm actually going to have to adjust my GJ trade. And then enter a sell limit at the 61 instead. Because the buying zone is down here. There is a minor sell zone. Like I said, if it breaks below 152, we can short. But up here is a much lower risk for a trade. That's where a lot of shorting is happening. Buys, shorts. So we get in here to the 4-hour. So I am already in this trade. What I'm doing is I'm scaling in. So I don't have the biggest position on this. I probably have a quarter of my normal position size, 25% of my normal position size on right now. What I'd like to see is a retracement back up to 153.5 or 153.6, right to the 61.8. If we can see that, then we can short back to the downside. I don't know if it'll make it all the way up there. I have a few zones here. Like if you look left, here's the way I play this game. I ask myself, where is all the selling happening? And so I say, okay, this top yellow zone, this seems to have a lot of action. That's the 153.5 zone, or like 153.2. Let's call it 153 to 153.3. There's like a 30 pip range here. So we can either wait for a trade that might never come, or we can enter at 153. So let's say a sell limit at 153. And if it does go a little bit higher, that's part of the patience of holding a trade. You might have to hold 20, 25 pips of drawdown before the market goes your way, but that's okay. It's part of the game. Getting wick entries only really happens when you're scalping entries and you're really just on the charts for a prolonged period of time. When you're trying to do a strategy that's more hands-off, you're really going to have to expect that the market is not going to move on your schedule. You're going to have to accept that you're entering the trade, and that's all you can control is how much are you risking and when you enter the trade. When the market moves, how fast it moves, and how aggressively it goes in your direction, whether it goes in your direction at all, that's a function of the market. If you try to take ownership over that, you're going to be in for a world of hurt. EU, ouch. I didn't even take this trade, but this is painful to see. Same thing that happened to me on this trade at the highs. So I really got to start setting my stop losses like above the high. What I'm starting to realize is when you have the first top on EU, the second one is normally higher. Now that very rarely happens. What you normally see is you see a peak, then you see a retracement. The retracement is a lower high. That's what indicates the continuation of the bearish or the reversal. So for EU, it likes to do the bat ear and then a little bit higher. What it does is it hits the stop losses and it activates any buy stops that might be there. So that's something I'm going to have to be mindful for. And I know exactly what level it is. If I was to measure from top to bottom, this would be the negative extension. If I measured the fib of this from top to bottom, let's actually do it together. Measure the fib real quick. It should be at the 1.27 extension. So I measured it from top to bottom. This thing pushed up to the extension level before it ended up dropping. So now what do I see? I want to see a retracement back to the 1.107. So a retracement back to these fib levels, get this sort of head and shoulders formation, and then a drop. Or we look at the higher time frame. What do I have the zone drawn for? So what happens is when I don't have my zones drawn out, because I don't trade EU. I was going to add it back to my pair or back to my watch list, but I haven't really started trading it again. 1.103. So there is a selling zone here. A whole lot of wick action. There's a small selling zone here. A lot of wick action, some support, minor resistance. There's some resistance here. So the level is not irrelevant. Like it definitely has something to it, but it could be a stronger zone, if we'll be completely honest. So I guess a retracement back to 1.104, that's going to be the trade. Okay. Hopefully we get some sort of rejection here, and then we can short from 1.104 back to the downside. Now, if you're asking big picture why I'm looking for shorts, obviously I explained this at the beginning, but I'm looking at the trend. So first off, highs, lows, lower high, lower low, lower high, lower low, lower high. All right. So now whenever we're in a bearish trend, I like to look for a bullish pullback to short. Where do I look to short from? Previous areas of structure. So we have one previous area of structure up here, and then we have another one down here. And they're marked off by these different color zones. If we close below the 1.104, then we can just look for a pullback, lower high, and sell. Make sense? Worst case scenario, it pushes up again back to the 1.13, and then we short. So for me, it's a risk and reward game. If you're risking 1% here to make 3 on the downside and you lose the trade and you're out 1%, you take the re-entry at this level and make 4% on the way down. And you still end up with 3. So take the risk is what I'm saying, but make sure that you guys are using proper risk management. Okay. We're at daily support. We got a double bottom, but the momentum is still bearish. We're still making lower highs. And right now we're in the middle of making a lower high. Beautiful. This is U30, by the way. Do the same thing on SPX. I'm actually going to project just the slightest, which means instead of drawing from bottom to, or from top to bottom, I do it from top to my final target, which is the previous low. Fundamentals don't move the markets, guys. It's just a way for people to make sense of price action. Just focus on where the money is going. Fuad, that's the single stupidest thing I've ever heard in my life. I'm just going to be honest. Like, I love when people are confidently wrong. That's my favorite thing about trading. Guys, somebody tell me in the chats, what does these magic colors on the screen represent? What do these magic colors on the screen represent? What do all these candlesticks mean? What does the price? What does this price mean? Why are we looking? What's the price? What are we looking at here? What do these technical charts represent? For U30, I really want to see a pump back up and then a drop. 33,600. I want to see like this area up here, but I don't think we'll make it back up. So my second option is trading the market open strategy, which is my consolidation. I'll put this out here for you guys. Let me know, what does the price represent? What do the charts represent? While I show you guys the sauce of all sauce, you guys can thank me later, by the way. Boom, boom. So do the charts represent just imaginary, like just imaginary lines? Is it imaginary, just colorful candles? Are we playing, is this like, I don't know. Is this like arts and crafts? Is that what we're doing? He said, sir, gift me $10,000 funding challenge. Send me your MyFX book to chartaddicts@gmail.com. If I like what I see, I'll fund your account. Order flow expectation of market makers. Okay. You know what? Shibiza? I'm going to give you that one. That's a very intelligent answer. It is the order flow expectation of market makers. It's where do they expect retail flows to go, and they try to beat it by manipulating price to those areas. Very well done. But this person says that fundamentals don't move the markets. They don't have a direct correlation, right? So it's not like CPI news comes out and then on the other side, the price is going to pump. That's not what I mean. But I do mean that this entire thing is tracking the fundamental behavior of what's happening in the real stock market of the United States in the Dow Jones. So if we had a pandemic in 2020, the pandemic comes first. The pandemic comes first, and then the crash comes after. The Federal Reserve turns on the money printer, and drops interest rates to zero, and then we have the bullish recovery. We don't have a bullish recovery and then the Fed wakes up and it's like, oh, the market's recovering, let's start pumping money. So don't be stupid. Like, look at, there's an information flow of how we get to price. There is a fundamental event. The fundamental event builds sentiment, and then the sentiment fuels price action through flow of money. All right. I understand, I think, what you were trying to say, but you can't say that fundamentals don't move price. That's very, very wrong. And the more that folks try to ignore fundamentals, like a lot of people, I've seen folks trade years with technicals, and I think they would just be that much better if they just added fundamentals to their game. Because it's not going to take away from your technicals. If you're trading at the 61 and you're going to take the trade regardless, like looking at CNBC is not going to make or break your bias. What it's going to do is going to add to the fact that people are either on your side with this trade or they're not. You'll understand are the people who run these markets, are they on the same side as your trade? Shorts on gold, shorts on gold, shorts on gold.
We're already in, brother. We've been in since 5 in the morning, my brother.
And I don't doubt it. Ladies and gentlemen, that's the voice of Stefano Perez, one of our head educators here. Incredible gold trader, one of the best that I've ever met, and incredible crypto trader. Just an incredible trader all around. A lot that you guys can learn from him. And if you've been on these live streams before, you've seen his gold calls. Everybody help me welcome Stefano to the live stream. Put something in the chat. Let Stefano know that
you, man, you're the GOAT, brother. Thank you very much, man.
Of course, bro. Look, we see the hustle. You're crushing it. And I'm just going to be extremely transparent, because I feel like if I'm not, I'm lying to you guys. And that's not my job on the stream. Stefano saves my account sometimes. Sometimes I'll be a little, I'll be trading a little bit too much. I might have taken one too many trades on Nasdaq. I see Stefano call out a certain trade, as long as it's within my risk parameters, I take it, and it usually saves my ass. Or I call Stefano because, we're cool like that. And Stefano's like, Roy, you got to do this, you got to do that, you got to take off this and that. And having a qualified person in your circle that's just as talented, that's just as skilled, and just as committed to trading as you, one of the most powerful things that you can have. So if you guys are getting coached by Stefano, I hope you guys understand like the level of, I hope you understand the level you're playing at. You're learning from Michael Jordan, for real.
Let's go, bro. Let's get it.
My guy. So what I'm looking at for real on Nasdaq now is I want to see a push up to this key level to about 13,700, and then I want to short from 13,700. If you guys want to scalp these longs, that's an option, but I personally will not trade against the bearish momentum. So if you guys want to scalp these longs, that's your own risk. But personally, I'm going to wait for a pullback and short. If you just wait to trade with the direction of the trend, your win percentage is going to go up by 20 or 30%. Try this. Say, Roy, I've tried everything. No, the fuck you haven't. People I work with, we do almost 200 consultations, one-on-one, 45-minute consultations with traders every month. 200. It's almost 50 a week. 50 a week. You guys do 50 of anything a week? It's a lot. It's a lot of data points. And we see the same things consistently. Traders will tell us, I've tried everything. Well, have you tried not doing the stuff that obviously is doesn't work? Like you keep trying to counter trend trade and you give back your profits. Then you get mad and you force the trades because you missed out on the actual direction and you're starting to go back in. Now, do all traders still fall into some version of these traps? Occasionally, yes. Let's be transparent here. But can you identify those certain points by having a third person look at it? That's the whole point of what we do at ChartAddicts. So if you look at your trading and you realize you're always trying to counter trend trade and find pullbacks off of key levels, when instead, if you just started waiting for retracements and entered in the direction of the trend, your success rate would go up by 20 or 30%. That's all you need. That 20 or 30% is the difference between being unprofitable and profitable. He said arts and crafts. Yeah. He said badass trader. The entire Chart Addicts team are goats. Yep. Marlon says plus risk management. So risk management is a big one. Like that's the first thing that everybody can start doing to improve their trading. Everyone says, Roy, I've tried everything except you're over leveraging on every trade. You haven't tried shit for real. People, there's a lot that you can do in your trading to fix it. Like when folks come to me, I'm the last line of defense, right? When with your trading, you've been trading for 4 or 5 years and you can't get this shit down. You burned it. You're beefing with your wife. That's when you show up at my door and we handle real shit. There's a lot you can do to fix your habits in trading. So before you tell yourself, I've tried everything, like, have you really? Have you stopped over leveraging? Right? Have you reduced the account size, the lot sizing, and started playing at a more comfortable and confident level? Have you stopped, taking more than X amount of trades a day that are obviously losing? Have you cut out that one pair that's consistently lost you money over the years? Have you done everything? Well, Roy, I don't like trading Euro AUD. When I look at your MyFX book, if you have 15 out of the 17 trades on Euro AUD that are winners and you keep burning your account on gold, I don't care if you like gold. I don't care. You're going to have to trade what makes you money. This is the nature of the game. So this is just a little dose of reality for folks. I know everybody wants to trade everything. Everybody wants to trade that one thing that's going to make them a bunch of money. People say, Roy, I'm starting out on UJ, and then I'm going to move over and master US 30. Like, what the? Hey, Roy, I'm practicing wiffle ball right now, and then I'm going to go out there and master soccer after. The wiffle ball is helping me with my soccer. Look, the best way to master soccer is to start playing soccer. Get out there, get your ass whooped, lose a couple games. You'll learn a lot. It's the same with trading. So if you're going to be trying to master a specific pair, stick to it. But if you start to realize that there's certain things that are consistently hurting your ability to make money, you're going to have to recognize it, be real with yourself, and cut those things out. Now, if you don't know what's hurting your trading, ChartAddictsFX.com. Come work with myself or any of my coaches, and we'll help you figure out what exactly is wrong with your trading. All right, so I actually might scalp these buys up just for the sake of the stream. What time is it? 10:17? Nah, we don't break rules, people. We don't break rules. One of the best pieces of advice I ever got was from a mentor. I used to work at Merrill Lynch. It's a subsidiary of Bank of America. We do wealth management. And this guy read a lot of Warren Buffett, and he kept showing me like his favorite Warren Buffett quote, which is now my favorite Warren Buffett quote, which is your job as an investor, and in this case, we're traders, is you have a bunch of spectators around you, right? In this case, we're on a live stream. There's a bunch of people watching. We have about 52 people in the Zoom, 150 on YouTube, not a bad audience. And I kind of feel like I'm playing baseball. And in baseball, like if you don't swing, the audience is going to start to yell at you and like try to encourage you to swing because they want to see some action. They're going to say, swing, you bum, swing. And your job as a baseball player is to ignore the crowd and only swing at things that make sense for you, that you know for a fact you're going to hit out the park. You would never swing at something that you thought you were going to miss. That's just not the way that game works. Now, in real life baseball, eventually you strike out after 3. In trading, you never strike out. I can sit here and watch trade after trade after trade after trade after trade and quote unquote miss the trade and then take the one that actually, fits with my strategy. And that one is a home run. You guys understand the difference? So a lot of folks, they think that they see an opportunity. Like right now, there is this inverted head and shoulders forming. Okay, minor support forming right here. It does look like a good quality trade to take to the upside. Some folks are like dying on the inside to buy this thing up. The mentality of the swing you bum. And some of you guys, your audience is in your own head. You're telling yourself to swing for no fucking reason. You're getting in your own way. And so if you remove that temptation to constantly be in a trade, what you start to do is develop your strength to only take the quality positions. Now, what kind of magic happens when you stop gambling random orders and you only take the best, highest quality position? Bearish trend, right? Level of support, turn resistance, or almost resistance, turn resistance right here, support back here. What kind of magic would it be if we took the bearish trend, looked for a lower high, looked for a double top retracement, and then shorted this thing back down? That to me sounds like a more favorable strategy than buying the inverted head and shoulders only because we had what I would consider probably 8 hours of bullish movement in probably 3 months of bearish action. Since the beginning of the year, we've been bearish on Nasdaq. Okay. One candle on the daily is not a reversal. One candle is not a reversal. You know, you guys are like, see one green candle. It's like, oh, the market's coming my way. No, it's not. Look at the structure. There's a high right here. It's a lower high right here. And there's a lower high forming right here. Now, can it push up to one of these other significant Fibonacci levels anywhere around the 14,000 area? Sure. Very possible. But am I just strictly looking at the local structure right now and seeing where have we already exhibited bearish movement? And then where could we look for a retracement? That's my zone. Now let's get accurate in here to look for that price. Bearish, top down with the fib, 13,700. So what I'm going to do is I'm actually going to set my sell limit at 13,690. And I talk about this a lot, but I scale my positions. So let's say I want to throw a standard lot size. I would put 0.25 here, 0.25 at the 78, and then 50% of my my trade size on the retest. So what that would look like is price comes up to the 61, I take a short, small position, 0.25. It comes down and then pushes up a little bit. Oh no, I'm in drawdown on the first position, but I'm going to enter at a higher price, give myself the best entry. Okay. Now I have these two positions open. Now the market comes back and I'm in profit on both. I'm in deep profits on the top one. I'm in minor profits on this one. Now what can I do here is I can close the whole trade. I can close the one that's in break even and I can close the other one that's in profit. Make sense? And then the market retraces and then I can enter the rest of my position on the retest back inside the range. That's optional. Most important thing is that you're putting your larger positions at the higher price. So if you only wanted to put two positions, I would put 0.25 here and then 50% of the position up here and then 25 down here. What that does is this little rejection that you get off the 78 down to the 61, that can be all the profit you need to walk away for the day. So scaling in has allowed me to not miss as many trades. And when I'm in drawdown, not to panic and just get out of the trade too prematurely, but instead to allow this thing to fully play out before I make, a fast judgment. Oh, that makes so much more sense. I heard drawing I was a little bit, I was projecting a little bit too much on the fibs. Now, if I look at it a little bit differently, which is this is the swing low of the recent impulsive push. This is the high. Now the Fibonacci's make a lot more sense with the price action. So we might not even make it to 13,690. It might come up to this area of sells right here. Selling, selling, buying, selling, and selling. So 13,670. Yeah, higher time frame, this thing could just fall from here, honestly. And so I always ask myself, what if everything that I just did doesn't matter at all? And what if the market doesn't respect any of these levels? What would I do? What's my like game plan? Because what I used to do, guys, is when I didn't have a game plan in the past, that's where all my mistakes would come from in trading. I wouldn't have a game plan for what would happen if the market didn't go my way. And so I would always enter a random position just to make up for it. So what I do now is I try to think about multiple scenarios. I try to ask myself, if this specific position doesn't work out, what will? So a short up here is possible, wick, retest, and drop. So that's a good zone to play in. Fake to the downside, retest back up. That can happen. And then break down, retest, and we can short from here. So even if my original position idea doesn't work out, I know that there's multiple entry points that I can still take to be in this trade or to make profits in this trade. So I can short from here to here, just inside this range, just like we see here. Okay, the market has created a small pocket for us to trade in. You guys know I have my primary and my secondary resistance. If you guys have gone through the volume 1 course, you understand the difference. Here's my primary resistance, and then here's my secondary resistance. Or you could even consider these highs the secondary resistance. But I'm going to count these two because I've done my analysis. So you could short here for an aggressive entry, but this thing could wick up before it drops in your direction. So if you have a small account, you would just wait for this. If you want to scale in, you could start scaling in from that lower price. Make sense? I know we're going through some advanced strategies here, but just want to make sure that you guys are well prepared. Well prepared. Speaking big facts, finding that pair takes huge psychology. I hope y'all are taking away the sauce. It kind of sounds like that, but what I want to do is I want to get people away from the mindset of this shit is difficult. Like, it takes so much psychology in trading, so much psychology, so much psychology. Does it? Guys, I found out a secret. I'm going to get you guys, this is probably the most profound thing that I figured out in trading up until this point. You guys can write this down. Make sure you quote me. My name is Roy, R-O-Y. Just going to go ahead and let you guys know this. Trading is the only game in the world where you can make such easy money that you start to try and convince yourself that it's harder than it is, just to like understand the situation that you're in. As humans, we cannot fathom to sit around and click a button, and if I just walk away from the screen and I do that 10 times in the week, I'm going to make money from doing nothing. That cannot register because we are all workers. At some point in our lives, we all made income. And so this concept of making money for nothing is foreign to most of us. So everybody tries to make trading harder than it actually is to try and feel more comfortable in this environment that's very, very unnatural. If you guys don't think that making money for doing nothing is unnatural, like, it is the biggest hurdle to trading. But once you start to understand that we're not doing anything but sitting around and waiting, and then I click the button and then I fuck off, and I'm getting paid for that, and making peace with that while there's war happening and there's people struggling, and I go to spend money at the restaurant and all these people working their ass off for minimum wage. Guys, I might accidentally I might accidentally put in an order and make somebody's four hours of salary. Just like, let that sink in. You can't really justify that in your mind unless you start to create these psychological boundaries to justify this crazy situation. Now, here's my tip. You don't have to justify it. It doesn't fucking have to make sense. It just has to make dollars. Okay? So stop trying to make life more complicated than it is to try and justify that shit rate really ain't as hard as you think it is, and just play the fucking game. Some of you guys, I think, are scared to win. It's a different conversation. All right? Trading is more EQ than IQ. Right, you are. Say that again, bro. Slower. I got to write it down. I mean, instead of spamming the chat box, you should be writing, my boy. You got 7 messages in the chat box talking about, bro, write slower. Famio, where the hell did you have time to send all these messages? I love YouTube so much, guys. I know I talk my shit. I actually really love everybody on YouTube. I love you guys in the Zoom Chart Addicts members. We go into the fucking moon. We out here locked in. These people are out here soaking up the sauce, but we do this on the daily. Um, it's the lifestyle we live. I know you guys are gonna see me talk shit. If this is your first time on the stream, I'm not emotionally invested in any of these comments, but I love talking shit because it's a little bit of fun. So if you guys see me out here wilding out with these people on YouTube, just ignore me. I'm having fun on the stream watching grass grow with Nasdaq. Like, look at this price action. I need to see if there's any. So today's Thursday. CPI news came out just as expected, so really nothing much. 0.8% is a huge jump, guys. Inflation is high. You go to the grocery store, you had $100. You just lost 0.8 this month. This month, your $100 can only buy you $92 worth of goods now. Well, that would be 8%. I'm sorry. Hold on. All right, I wasn't as good as math as I thought I would, as I thought I was. So you got $100. Okay. So just this month alone, your $100 is now worth $99.20. So you lost 80 cents in purchasing power this month. Right? For the $100. Now, let's say if you had $1 million portfolio, what did you lose? If you had $1 million portfolio of cash just sitting around, $1 million cash sitting around, it would now be worth, you would have lost $8,000 this month in purchasing power. $992,000. That's what your purchasing power is now, not the million. So inflation is pretty high. Core CPI, this is like the core goods and services that we buy at the grocery store. This is food. This is like household products and things like that. Unemployment claims, this is actually something I'm interested in. 227,000, way more than last month. This is the amount of people said that CPI number was a lie. Gali, they ain't ready for this conversation, bro. We're going to have to do this a second time. Obviously, guys, the price of goods and services has gone up way more than 0.8%. Like the haircuts that I'm getting now, I don't leave the barber without paying $45. Like I used to pay $20 for my haircuts once upon a time. That's over 100% increase. So some things in life, some things in our daily life, the inflation has gone way above the printed numbers. But they're trying to soften it up so that the people don't rebel. I understand, guys. The Fed's in a terrible spot. I used to only talk shit about the Fed. You guys can go to the old Chart Addicts articles. I used to only talk shit about the Fed until I understood the decision making that they have to do. That shit ain't easy. I think we're getting ready to sell. I think we're getting ready to short NAS. I want to see a nice push out of this range. Then we're going to wait for a pullback and just short this range out. We just have to break below these previous candlesticks and then also close below. Yeah, this is looking like clear shorts. Looking like clear shorts now. Yup. It doesn't even hit 2-to-1 risk and reward for this. So what we're going to have to do is manipulate the entry just a little bit. Beautiful. Now you guys see why I don't scalp counter trend, because it doesn't always reach that top entry that you want. Sometimes it just starts to break. This is exactly what we want to see, though. I want on these live streams, I want you guys to take away something extremely powerful, which is my mindset and my perspective while things are moving. Some of you guys in this present moment are dealing with an extreme feeling of missing out, an extreme feeling of I need to be in this trade, an extreme feeling of, oh no, it's moving without me, yada, yada, yada. My perspective is, oh great, the market is now confirming the direction of the trade. The probability for me taking a short just went through the roof, because before it was sitting at support. I don't know if it's shorting, whatever. The market has just confirmed my direction. So while some of you guys are stressing and entering down here at the lows because you may have quote unquote missed an entry, for me, I'm so happy that it's confirmed my trade that now I'm just waiting and plotting on pullback so I can enter at a higher price and catch the real drop. You guys understand that perspective shift? Crucial stuff, man. I'm giving y'all everything today. If you're taking notes, you're going to thank yourself later. If you're out here mouth breathing, may the Lord be with you. He said 4 years in, and I totally agree, Roy. It's a psychological game. That's what I'm struggling with. Now, what you have to understand, brother, is if you've been in this game for 4 years, that you have some habits that need to get unwound. So you're not like a blank slate. Everyone's like, oh, I'm a beginner trader. I don't know much. You are in the best position to make money. If you're here and you've been trading for less than a year, congratulations. You are in a perfect position to learn a winning strategy and crush it. Now, if you guys have been trading for years, there's a formula that I made for how many months it takes to undo 1 year of bad habits. I'm not going to tell you guys what it is. It's for the ChartAddicts members. But I can tell you there's a certain amount of months you have to work to make up for a habit that you built over like a year, 2 years, 3 years. So you will not go from being a boom and bust trader to having consistent profits in like from A to Z. You're going to have to go through these middle stages of stop the bleeding. So first things first, you're losing a whole bunch of money every week. First things first, stop losing the money. So stop taking random trades, take 3 trades. You're not losing as much money. Reduce your risk. The second step is reduce your losing, increase your winning, right? Better entries, better lot sizing, better risk and reward, better probabilities, high quality trades. Then there's stages to this, right? If you guys want to learn about this, go to the podcast I just did with FX Alex G. Everybody go to YouTube and type in ChartAddicts FX Alex G. It's going to be like the 4th one down. So this is me. That's my face. I'm out here. I don't know where the hell he got this picture from. I think it was while I was sitting down. But this thing is doing numbers for a reason. We talked about all the psychology, all the trading. We talked about NFTs. And so if you guys are interested in looking at the perspective of somebody I respect as a trader, Alex, and myself going through this information, I highly recommend that you guys go check out that podcast if you haven't. Also, side note, shameless plug while we wait for this pullback at 13,500. You guys can set your sell limits at 13,500. While we set our sell limits at 13,500. Ooh, fuck yeah. I'm in blues on the GJ shorts. Awesome stuff. But while we wait for this thing to retrace back up, if you guys haven't already got your tickets to the FX Summit 2022 conference, make sure you guys grab those before they sell out. VIP tickets are almost sold out. We probably have another 2 weeks before they're completely gone. We have individuals such as the founder of Oanda, the core team of TradingView, the core team of Robinhood, FTX, Crypto.com, Binance.com. They won't all be speaking. TradingView is speaking. Richard Olson is speaking from Oanda and Leaky Group, and Robinhood is speaking. But the rest of those guests of FTX, Binance.com, Crypto.com, they're going to be getting booths for the expo. And so what we have is we've put together a group of some of the most important names in the industry and also taken the retail side and brought some of the most successful retail traders and put them all in the same room for us as an audience to go and enjoy. Right? As great of a trader as I am, I'm a drop in the bucket in the big picture. There's market makers coming, brokerages, retail traders making 8 figures a year. There's real deal shit happening. So if you guys want to be around this environment, which I recommend every serious trader needs to be around an environment like this, go to fxsummit2022.com to look at your tickets. If you have any questions about tickets, go to my Instagram and ask. You guys can see all the special guests. We got Q Banks, Lambo Raul, Mamba FX, Druzy, of course, Goldfather, Derek Vandy, Charlene. We have the FX speakers. We got Anthony, James, Jessica Lane, Andy Peters, Jason Stewart. An incredible lineup. We have Alex Gonzalez on stage and my guy, Luke Longmire. The crypto side, we still have to update, but the institutional side, you guys will see Richard Olson, Pierce Crosby from over at TradingView. Really, really fascinating stuff. So if you haven't already grabbed your tickets, this is my shameless, extremely shameless. This is my shameless plug, fxsummit2022.com. You guys want to go and get your tickets, I will see you there. If you guys want to level up your game, that's going to be the place to be this year. I know some of y'all are plotting these March vacations, these April vacations. Oh, spring break, da 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 da. What if you guys finally took a step to invest in yourselves? What if this is the year? What if this conference does it for you? You get around all these people who are making all this money and you start to realize, you know what? I'm done living like a bum. I'm done being around the same people that I've been around in my hometown. Fuck these people. I'm tired of sitting in my room and trading for myself. I want to go see this lifestyle that everybody's always showing. Is it fake or is it real? I want to go touch it. I want to go see it in person. So that's what I want for all of you guys to come and enjoy. That's the FX Summit. Mark Dom says he's up 2K on Nas. Good stuff. Good morning. First time here. Do you do this every day? I do this pretty often for the ChartAddicts team. It's not every day. I don't see opportunity every day. But for YouTube, we do this every single Thursday. Every single Thursday. Bada boom, bada bing. All right, I'm getting on here on my smaller time frame shit, y'all, because I have to head out for a meeting in about 10 minutes. But I want to make sure that we get this entry together. So this is the ugliest price action I've ever seen, people. This is the ugliest price action I've ever seen. Why? Because where's the pre-session consolidation? This is the pre-session consolidation, right? So when you test the lows, it's a buy. When you test the highs, it's a sell. This thing did the first fake out. Okay, that happens every morning. Consolidation, whipsaw, retest, and drop. No, there was no drop, right? There was consolidation here. People lost money, shot up. Okay, bulls started to get into the market. It hit the previous high of the pre-New York session and then dropped again. Okay, fuck it. I'm gonna enter off the 61 and catch the short. Nope. Another test, push up above the range to wipe everybody out. This was a very, very serious calculated move. I'm just gonna be completely real with you guys. So what I'm waiting for now is a retracement back to either the low of the session or the high of the session, the pre-New York session. So it's either the 78% retracement or it's down here around the 38. I'm favoring the shallow retest. I'm favoring this thing just kind of wicks up, and then drops. So let's give this a second to push up a little bit higher to 13,516. And then we can start to enter these positions. It's 10:45. It's about ready to start pushing. So what I'm actually going to do, guys, is I'm going to start to scale here. What I'm going to do is I'm going to scale at every fib. I'm going to scale here, put 25% in my position, 25, and then 50 if it even makes it up here, and then scoop it all the way back down. So I'm going to put in my first position now. Hey, yo, shout out to GJ. Okay, close this, close that. Yeah, I gotta send somebody an entry. I gotta send somebody my SPX entry. I'm still holding the SPX entry from last week. The one from last, like literally a week ago from the live stream, I'm still holding that trade. I'm up 170 points so far. All right, first trade is in. Alrighty, so this is the fun part. Now we wait. If it retraces higher, We look left and we say, where is the retest zone? So there's a bunch of wick action here, but the bodies are all closing below this line. So as long as we continue to close below this line, we're looking pretty good for the shorts. So price could wick all the way up. As long as we close below, we're doing pretty good. So as the market retraces, I can enter more positions, but the first position is already in. And just for the sake of, oh my God. I'm going to have to put this in the members chat just so I can keep track of this myself. This was the original markup, by the way, for the shorts on Nasdaq at 13,750. 13,750. That's right here, people. That's right here. Called this short since yesterday. Beautiful head and shoulders right here. Push down, and now we have a continuation of that trend. So your first order should already be in profit. If you guys have a smaller account and you're using these micros, you're in a little bit of profit. Let's see if we can get this pullback first so we can enter another position and hold this thing down. That's about 10 points, 6 points, 10 points on NAS. So about 70, 80 pips. Where are we at with this stream? Good morning, first time here, Bearish EA, good stuff. Same concept on NAS for US 30, sure. Thoughts on magic keys? Pretty good when you step out of the screen and set a PP and auto break even. PP. Trailing stop? What does PP stand for? I think the magic keys is cool. I just feel like, for me, I like to consciously be involved in my decision making in the trades. And so I, like, once a week I go through my account size and I say, okay, my account size has grown or shrank by X amount. Here's what I have to do to adjust my lot sizes. Now, when I trade Nasdaq, I typically have the same style of trade, and I'm looking for a risk and reward. Like, I'm looking for at least a 2-to-1. So the pip count matters. Like, it's 1,100 pips of risk, which is pretty high for a lot of folks. But for me, I'm really just looking at, if I risk 1%, I'm looking to make 2% on the way back down. So I kind of just look at it in terms of percentages. But when it comes to pips, like if I'm catching pips, because I know a lot of folks are dealing with a small account, and what I realize is when I'm using micros, the risk and reward matters, but really I'm like risking $60 or $70 on the small account, and I'm looking to make $200-300. So if I'm up $200 on a 0.01, that's 2,000 pips. That's a shit ton of pips. That's more of a flex about the instrument that we're trading rather than the actual trading strategy. So I know a lot of folks are like, oh, look at the risk and reward. Don't look at the pips. Do both. Pips is how you count the scoreboard. Risk and reward is what gets you paid. As long as you're winning more than you're losing, you're doing pretty good. So I'm getting ready to re-enter this thing pretty soon. All right, I'm putting in another entry. At 13,510. 13,510. The rationale behind this is higher time frame. So we already have, and I understand this, guys. I see the inverted head and shoulders, but what I want you guys to notice is the body of the candlesticks are above, body is below. So when the body is above, we go long. When the body is below, we short. When the body is above, we go long. When the body is below, we short, right? So we're already on a bearish trend. We already had bearish intent. We've already had a retracement and rejection off of this previous sell zone. And now we're sitting at this previous sell/buy level. So it might take a little bit of time. It might retrace and dance around, but I'm pretty confident in this position the way it looks right now. So I've entered my second trade. So I've stacked orders and basically just waiting on this thing to play out. So 50, it's 10:50. Guys, I have about like 5 more minutes before I have to hop off and meet with this marketing team. So if you have any questions, put them in the chat now or forever hold your peace. My 2 entries I entered at the retest are in profit, and officially all of my orders are in profit. So if you guys are in blues, you have a choice to close. It's up to you. If you guys want to walk away in blue, if you've been having a bunch of losing days and you want to just see a blue screen, what you guys can do is while we're in profit, these 10 points or 15 points, whatever, you can close in blue and walk away. Now, some of you guys want to get a little bit greedy and you want to come back and say, Roy, it didn't work, da, 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 da. But in reality, you were in blue and you chose not to close. So for those of you guys that are dealing with losing streaks or just very frustrated with trading, you haven't really been able to get a grip, I would suggest just closing the blues and walking away and understanding what that feels like to have that self-control. Some of you guys are already up for the week. This is just another trade for you. You guys can hold this thing and we can milk this to the downside. Woo! Hey, yo. Bro, you see this? Time to put some respect on it. Hey, yo, they heard me loud and clear. Hey, yo. Hey, yo. 400 to 600 pips every time we talk, people. God. Let's run it. I got my 2 accounts running. I have one of them, which is the live stream account that I told you guys about, that I always trade on the live streams. And then I have my main account. I'm not even going to show you guys these numbers, but I'm going to tell you right now, I'm flying back to Florida. Hey, yo. Now, I know some folks are like, Roy, and this is what some of my mentors tell me, is that they get on some of these streams and they're like, Roy, you get too excited when you win. They said that it's going to come back and bite you in the ass when you lose. Sometimes it does. But I'll be honest, the true test of maturity is when you can lose with pride and when you can win without apology. I am unapologetic about the fact that we're up fucking bands right now, 500 pips in a matter of minutes, right? Now, did it take like an hour and a half for this, for us to watch grass grow? Yes. But is the market going to do the rest of the work for us? Yes. So you say, can you lose with pride in the markets and be able to understand and humbly look at the circumstance, or is that going to affect you on the losing side? I can lose with pride and I can win, with pride, but you guys have to get excited about your wins because this energizes me. I waited this whole time for this move, and if I don't celebrate that, then I'm not going to associate waiting with winning. Do you guys understand? So the association of waiting with winning is what I'm celebrating right now. It says, thanks for this entry. Let's go. Yada, da, da, da. Yeah, people, I ain't wearing this for no reason. I hope you guys know what the fuck this is. Big goat status. Big goat status. Now, if you guys have an Instagram, you guys know I'm always asking this. I literally ask this almost every day. Please put something on IG and just give us a quick tag. We'll put you guys on the story. You guys know all the big dogs follow us. Everybody's going to see your posts. So put it up on the story and just, hey, quick tag at ChartAddicts and just show the folks that we out here making money. My brother makes music, people. My brother makes music. He has a line. He sent me a song the other day. He said, I'm making stupid money off of smart decisions. Now, I don't know if you guys listen to hip hop, but that's called a bar. All right. He dropped a bar. That's going to be my caption right now. So I'm making stupid money off of smart decisions. Beautiful. Guys, with 5 minutes left on the clock, like I literally have to be on this call in 5 minutes and I got to get up and prep. With 5 minutes left on the clock, buzzer beater, Kobe Bryant, side of the, I'm not going to compare myself to Kobe, RIP the GOAT. Michael Jordan level finesse on the corner of the baseline, can't even see the rim, getting pushed out of bounds. 5 minutes left on the clock, lobbed it, Hail Mary, and this thing is milking right now.
That's all GJ, bro. Look at that shit, bro. Stop playing.
Brother. Oh, hey, yo.
Stop playing, bro. Come on now.
Bro, they're going to put some respect on it or not?
Yo, 152.
Yo, the gold shorts too. I forgot about this.
Oh no, I already closed my partials, booked some, like it was like 100 pips.
Brother, it hit 1791. That's damn near 120 pips.
That's right. That's it.
Hey, yo, we're all the way outside today, bro. Stefano, I'm just gonna come fly down. I'll be right back.
Let's go, bro. You know you're always welcome in my crib, bro.
My guy. So, yo, Stefano, I gotta text you my SPX entry, bro. You're gonna lose it.
Let's see.
So Stefano's catchphrase is "It's the wicks for me," because he's the king of catching wick entries. This is a fact. It's not even bullshit. It's a fact. So I gotta send him this entry real quick. It's only a micro. I'm still holding it from last week. I'm not trying to carry too much swap with me over the sessions and over the weekend.
Right.
But that entry is from the stream of last week. So if you guys are trading this and you close partials or you close some blues,
nice.
Leave a micro. You never know how far this thing's gonna go. That's 170 points, Stefano.
That's a wick, bro. I'm telling you, it's oof.
And nice. The receipts are on IG or the receipts are on YouTube.
Yeah.
All right, people. I really gotta hop off. Great to see everybody. Stefano, thank you for stopping by.
I'm just happy to be in this calls with you, bro.
My guy. Everybody, Anthony, I see you in here. T, I see you in here. Gali, I see you in here. Frankie, I see you in here. There's so many names. I can't even go through them. I'm going through the core team. It's great to see everybody on the stream. Man, we really out here making money. We really, really out here making money, guys. Like, do you guys know how much people struggle in the markets? Like every day I do, I don't personally do consultations every day. I only do them on Saturdays now. But my team is constantly like doing consultations with folks. And there's a real struggle out here. And we get on these streams and show y'all how to do it every Thursday. And for the ChartAddicts members, you guys understand the most important thing is, what do you do after we get off? Are you going to give this money back? Or you're going to overtrade later in the week and give back some profits? You're going to double dip on this trade? What are you going to do that might hurt your chances of walking away with money? So the ChartAddicts members, you guys are in a little bit of an elevated place. And if you guys are like looking to level up your game, CA members, just book your calls ASAP. Our team is crushing it. Like our team is literally crushing it right now. And we're going to build the next generation of GOATs. And hopefully you guys come and join the team at some point. So if you guys are watching this on YouTube, again, my name is Roy Dunya, CEO, co-founder of ChartAddicts, the #1 consulting agency for traders around the world. If you guys would like to come get personal coaching, or if you guys need to level up your game, chartaddictsfx.com. Last but not least, if you guys haven't already booked your tickets to the FX Summit 2022 conference, I would recommend doing that before they sell out. This is the most anticipated conference for traders, investors, entrepreneurs, and crypto lovers. We have some of the biggest names in the industry: Oanda, FTX, Binance, TradingView, and some of the biggest names in retail coming to speak. So if you guys haven't already booked your tickets to an event that's going to change your life, I highly recommend you do that. Happy and safe